July 14, 2025. Bitcoin has shattered records, surging to unprecedented heights, finally reaching $120,000, a monumental achievement that underscores the growing acceptance and maturity of cryptocurrency. This milestone comes during Cryptoweek in Washington, D.C., a pivotal time for digital assets, where lawmakers are actively debating and shaping new digital asset laws that could redefine the financial landscape. For years, the U.S. government was often perceived as crypto's adversary, a source of regulatory uncertainty and concern. But now, the narrative is shifting. The U.S. is positioning itself as a global leader in the digital asset space. The surge in Bitcoin's price reflects renewed confidence in the market, signaling a new era of stability and growth. This confidence is fueled by the promise of clear, supportive regulation that fosters innovation while protecting consumers. After the dramatic FTX collapse in 2022, the entire industry was shaken to its core, facing unprecedented scrutiny. But today, optimism is back, and in a big way, demonstrating the resilience and potential of the crypto market. Congress is finally charting a clear and sustainable path for crypto, providing much-needed direction and stability. Balancing consumer protection with innovation is a delicate act, but crucial for the long-term success of the industry. The timing is no coincidence. The market's reaction is directly linked to legislative progress. Markets are responding to real policy changes, not just fleeting hype or speculation. With the U.S. embracing digital assets, the perceived risk is steadily dropping, making it more attractive to investors. And institutional investors are taking notice, recognizing the potential for significant returns in a regulated environment. $120,000 isn't just a number. It's a powerful symbol of crypto's coming of age in America, marking a new chapter in its evolution. We'll break down the key laws being discussed in Congress, providing clarity on their potential impact. We'll analyze what they mean for the industry, examining the potential benefits and challenges for businesses and investors alike. And we'll explore why big companies are now buying in, recognizing the strategic advantages of incorporating digital assets into their portfolios. This is a pivotal moment for digital finance, a turning point that could reshape the future of money and investment. Understanding these changes is key to navigating the evolving landscape and making informed decisions about your financial future. To seeing where crypto is headed next, and positioning yourself to capitalize on the opportunities that lie ahead. Let's explore the complex forces behind Bitcoin's new high, uncovering the factors driving its remarkable performance. We'll look at the new laws being proposed and debated in Congress, the political shifts that are shaping the regulatory environment, and the corporate adoption driving this transformation as more and more companies embrace the potential of digital assets. The U.S. is finally ready to lead in the digital asset revolution, setting the stage for a new era of financial innovation. Here's why that matters, not just for investors, but for the future of the American economy. Before we dive into the specifics of these new laws that are being considered, let's quickly recap what makes Bitcoin such a unique and often misunderstood phenomenon. It's important to understand its core principles before assessing how new regulations might affect it. At its heart, Bitcoin is digital money, a revolutionary concept that was created in 2009 by the mysterious figure or group known as Satoshi Nakamoto. Unlike traditional currencies like dollars or euros, it's not controlled or issued by any central government, financial institution, or bank. Instead, it operates on a technology called blockchain, which is essentially a public, transparent ledger spread across a vast network of thousands of computers around the globe. This decentralization, this lack of central authority, is what first excited early adopters and continues to be a core tenet of the Bitcoin ethos. Bitcoin's history since its inception has been nothing short of a wild ride. Its value has swung dramatically, from fractions of pennies in its early days to a peak of around $120,000, experiencing dramatic booms and equally painful crashes. The collapse of the FTX exchange in 2022, a major player in the crypto world, was undoubtedly a low point, wiping out billions of dollars in value and severely shaking investor trust in the entire cryptocurrency ecosystem. At that time, many analysts and observers believed that the industry might never fully recover from such a devastating blow. But the crisis, in a way, forced a reckoning, sharply highlighting the critical need for greater transparency, accountability, and real, effective regulation within the crypto space. As a result, calls for clear and comprehensive rules grew louder and more insistent, not just from government regulators and lawmakers, but also from responsible actors within the crypto community itself. Survival in this new landscape meant adapting to higher standards, and the industry began the long and challenging process of rebuilding, with a renewed and laser-like focus on security and trust. Today's renewed optimism and growing confidence are built directly on the hard-won lessons learned from those dark and difficult days. The remarkable journey from the ashes of the FTX collapse to today's record price levels is a testament to Bitcoin's underlying resilience and staying power. The core idea that underpins Bitcoin, decentralized, borderless money accessible to anyone, has not only survived the turmoil, but has also matured and gained wider acceptance. Now, with potentially transformative new laws and regulations on the horizon, Bitcoin is increasingly poised for even greater mainstream adoption and integration into the global financial system. Of course, the roller coaster ride isn't completely over, but the track ahead looks considerably more stable, secure, and predictable than it has in the past. Enter the Genius Act, a bold bill aiming to make the U.S. the world leader in blockchain and digital assets. Lawmakers see crypto as transformative as the internet was in the 90s and don't want America left behind. The Genius Act proposes a national strategy, a task force of experts, funding for blockchain R&D, and major investments in education. The goal? Demystify crypto for lawmakers and the public, encouraging responsible adoption. By making the technology accessible, the act aims to attract top talent and innovative companies back to U.S. soil. For years, uncertainty drove entrepreneurs overseas. The Genius Act wants to reverse that. It's a clear message. America is open for crypto business. The act lays the foundation for a thriving, innovative digital economy. It's about building the future, right here in the United States. The Clarity Act tackles crypto's biggest headache: regulatory confusion. For years, no one knew if crypto was a commodity or a security, leading to lawsuits and uncertainty. The Clarity Act introduces a simple test. Decentralized assets like Bitcoin are commodities, regulated by the CFTC. Tokens tied to a company's efforts are securities under the SEC. This gives projects a clear path. Start as securities, become commodities if they decentralize. Exchanges get a special license to list both types, making trading safer and easier. The act brings crypto out of the legal gray zone, protecting investors and encouraging innovation. With clear rules, companies can build confidently, and investors know what they're buying. The Clarity Act is the regulatory roadmap the industry has been waiting for. It's a game changer for U.S. crypto. The Anti-CBDC Surveillance State Act takes a different approach, blocking a government-issued digital dollar. CBDCs, like China's, raise privacy concerns the government could track every transaction. This bill prohibits the Federal Reserve from issuing a retail CBDC, arguing it threatens privacy and economic freedom. Supporters prefer private, decentralized cryptocurrencies and stablecoins, digital dollars issued by companies, not the government. By passing this law, Congress signals support for innovation and individual freedom over government control. It's a win for the crypto community, which values privacy and decentralization. The act ensures America's digital future is built on private solutions, not state surveillance. Combined with the other bills, it creates a comprehensive vision for U.S. digital finance. The message: innovation thrives, but privacy is protected. Together, these laws mark a seismic shift in U.S. crypto policy. For years, legal uncertainty kept big investors and companies on the sidelines. Now, clear rules mean more confidence, more investment, and more innovation. The Clarity Act helps investors understand risks. The Genius Act fuels new businesses. The Anti-CBDC Act protects privacy. This legal framework is a green light for growth, attracting talent, capital, and global attention. America is signaling it wants to lead, not follow, in the digital economy. The timing is crucial. The world is racing to define the future of finance. With these laws, the U.S. is back in the game. The foundation for a new financial system is being laid right now. Washington's crypto-friendly shift didn't happen by chance. It's the result of a political sea change. The 2024 election was pivotal. Donald Trump embraced crypto, promising support and drawing in millions of new voters. Suddenly, both parties saw the value in courting the crypto community. Lawmakers who once doubted digital assets now see their economic and political potential. The result? Bipartisan support for sensible regulation. New, crypto-friendly leaders at agencies like the SEC replaced the old guard, shifting from confrontation to collaboration. This change boosted investor confidence and fueled the latest market rally. It's not just about one politician, it's about recognizing crypto's staying power. Years of industry outreach are paying off with lawmakers now championing innovation. The political winds have shifted, and the U.S. is embracing digital assets. This support is crucial for crypto's long-term success. Corporate America is jumping into Bitcoin, adding it to their treasuries as a hedge against inflation. With only 21 million coins, Bitcoin is seen as digital gold, protecting wealth as the dollar's value erodes. MicroStrategy led the way, inspiring others to follow. Regulatory clarity has made it easier for even conservative companies to buy in. Spot Bitcoin. ETFs open the door for institutional investors, making exposure simple and secure. When big companies announce Bitcoin buys, it sparks a chain reaction, boosting confidence and driving prices higher. This cycle of adoption and price growth is fueling the current bull market. Corporate adoption is now a major force in crypto's rise. With new laws in place, this trend is set to accelerate. Bitcoin is no longer just for techies. It's a strategic asset for the world's biggest companies. The floodgates are open. The future of corporate finance is digital. The U.S. crypto landscape has undergone a significant transformation, a shift that's reshaping how we perceive and interact with digital assets. Regulatory clarity, gaining political support across the aisle, and increasing corporate adoption are no longer distant aspirations, but tangible realities. These factors are driving a new era of legitimacy and growth within the digital asset space. The FTX collapse is now firmly in the history books, a painful lesson learned. The shadow of uncertainty has lifted, and a renewed sense of optimism and innovation are making a strong comeback. Investors, both seasoned and new, now have access to safer and more exciting opportunities within the crypto ecosystem. This is largely thanks to landmark legislative efforts like the Genius Act, the Clarity Act, and the Anti-CBDC Act, which are providing a more defined framework. Big companies are increasingly validating the market through strategic investments and integration of blockchain technology. The looming risk of overly restrictive regulatory crackdowns is gradually fading, fostering a more conducive environment for growth. Entrepreneurs have been given the green light, signaling a new era of possibilities. They are now empowered to build the next groundbreaking wave of financial technology right here in America. The U.S. is doubling down on its commitment to economic freedom and individual financial privacy. This commitment is attracting top-tier tech talent and seasoned professionals from every corner of the globe. July 2025 is poised to mark a truly historic turning point, a pivotal moment in the evolution of digital finance. Crypto is rapidly being woven into the very fabric of the world's largest and most influential economy. The path ahead won't be without its challenges. There will undoubtedly be obstacles and periods of uncertainty. However, the overall direction is undeniably clear. Forward. America is boldly embracing the future of finance, positioning itself as a leader in the digital asset revolution. For anyone with a keen interest in technology, finance, or the intersection of the two, this is an exciting time. This is truly just the beginning of a new era of financial innovation and opportunity. A new, more open, and far more accessible financial system is actively being built and refined, and it's happening right now in this very moment.